His lessons directly impacted my ability to collect millions of dollars in US real estate and millions of dollars in US stocks. In addition to the US index, I also own Berkshire Hathaway. Some of you have heard me mention it. Run by this guy, Warren Buffett, arguably the best investor in all history. It is a $1 trillion company, and this is its website, and it's stuck in the 90s when it was created. It's a conglomerate, which is a fancy way of saying it's a whole bunch of different uncorrelated businesses, energy, insurance, railroads, private businesses, stocks, a whole bunch of stuff. It sells at a little less than $800,000 per share. So if you wanted to buy a lot, which is 100 shares, it'd be like $7.8 million. It also has B-class shares, which sell for $500 a pop. I bought the stock in the 90s because that was the only way to get access to the shareholder meeting. You couldn't go to the shareholder meeting unless you were a shareholder. But now all the shareholder meetings are online. You can attend them for free. I also bought and kept the stock because Warren Buffett taught me a lot of the lessons that I needed to learn to become financially independent. His lessons directly impacted my ability to collect millions of dollars in US real estate and millions of dollars in US stocks. I still pick up shares of Berkshire Hathaway when they become cheap. So how do I know when that is? Unlike a basket of companies like the US stock market, where I tend to buy more when the price is down 20, 40, and 60%, Berkshire Hathaway is a bit different. Warren Buffett has a metric that he looks at called price to book ratio. The price, or the current market value of the business on the stock exchange, is self-explanatory. What is book value? Book value is the value of all the assets of the business minus everything it owes. For example, if you had a lemonade stand, the assets would be the stand, the lemons, maybe some of the cash you have on hand, minus anything you borrowed or debt on the business. So if you have a price to book ratio of 1, that means the value of the business relative to the assets minus liabilities of the business is equal. Your business is worth $10, and the business assets minus everything it owes is also $10. The last 15 years or so, the price to book ratio of Berkshire Hathaway fluctuates between 0.98 and 2. It is currently at 1.73. I will look to add shares of Berkshire Hathaway when the price to book ratio falls to 1.2 or lower. Up until 10 years ago, Warren Buffett said that the company would buy back stock if the price to book ratio fell to 1.2, but he's since removed that limitation. Since I started investing in the stock, it has happened 4 times. First during the dot-com crash, then during the US credit crisis, next European debt crisis, which happened right after, and COVID. Currently, with a price to book ratio of between 1.7 and 1.8, is a bit too expensive for my blood. My biggest challenge is when both Berkshire Hathaway falls to a price to book ratio of 1.2 and the S&P 500 or US stock market index falls 20, 30, or 40%. I will most likely buy a bit of both. Learn the lessons about money that your friends and family just won't tell you. Download my free newsletter linked off the bio. Good luck. Take care.